Dear chartered accountants, working professionals, and students in the domains of Indian auditing, accounting, and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant.
Daily news and updates for 31st January 2024. Maruti Suzuki and Hyundai, the leading car makers in the country, are set to achieve their best January sales driven by strong consumer demand, particularly for SUVs. Industry estimates suggest that over 375,000 vehicles will be dispatched this month, an increase of more than 8% compared to January 2023. The share of SUVs in the domestic market is expected to grow 52 to 53% this year. The preference for SUVs has led to an increase in the average selling price of passenger vehicles in India. Maruti Suzuki and Hyundai are confident about the continued demand for the rest of the quarter. The government has received 9 bids from companies including the Tata Group, Tower Semiconductor, and Texas Instruments for the overhaul of its semiconductor laboratory in Mohali. The government has earmarked about $1 billion for the modernization of the 48-year-old facility. The state-owned semiconductor laboratory in Mohali is the only chip manufacturing unit in India that produces semiconductors for strategic and defense purposes, including for space exploration such as the Chandrayaan mission. However, the facility that was founded in 1976 has lagged behind private companies in terms of production as well as technology over the years. The government is in the process of modifying the production-linked incentive schemes for textiles, food processing, and pharmaceuticals. A cabinet note has been finalized to make these sectors more attractive for companies participating in the PLI program. The move aims to enhance investment in sectors beyond electronics, pharma, food processing, and telecom, which have been the primary beneficiaries of the PLI schemes so far. A Rs 1.97 lakh crore PLI scheme covering 14 sectors including textiles and pharmaceuticals was announced in 2021. In a significant development for the assessment year 2024-25, the central government has implemented a new rule requiring buyers to settle payments for goods purchased from micro, small and medium enterprises or MSMEs within 45 days of delivery. Additionally, all outstanding dues to MSMEs must be cleared before March 31, 2024. Failing to meet these deadlines will result in the pending payment being deemed as income subject to taxation. While the government's intention behind this rule is to safeguard the interests of MSMEs, it has stirred uncertainty in the market. Notably, Ahmedabad's textile markets are witnessing a surge in order cancellations, and chemical traders are also experiencing the ripple effects of the new regulation. Some buyers are strategically deciding not to make any purchases before February 16th to ensure that their payment deadlines fall after March 31st.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.